Hello again, Maverick traders, and welcome out to another market recap. This is Sankit from Maverick Currencies, and let's begin our market coverage. It's a Monday, May the 1st, a fresh start of the month, and let's see how things moved. This is a very important week, so let's keep a close eye on relative strength and weakness, and let's do a quick market analysis. Now, the equity markets overall had a nice little start of the day, but they did fail to break out. So we have a fake sort of false breakout in the equity markets. Both the S&P was able to close flat, and World Stock Index was down 0.12%. Crypto is taking a beating here, and this is clearly telling us that crypto had a false breakout, and it is moving lower here. Gold also was able to pull back as well. Again, we are seeing a battle between the gold market again, testing that 2000 level, and every time it hit that level, we see a sell-off. So that's something to keep a close eye on, as well as we have a very important Fed week coming ahead, and we have the US oil also down as well. So as you can see, it was not really a bullish day. It was more like a flat day. As you can see in this equity markets, we can see that we had a nice little reversal candle today. So after this candle, we are likely to see a little pullback to the downside. Again, the market remains bullish, but in the shorter term, we could be seeing a bit of a slowdown, especially everyone is waiting for the Fed to see what they have to say. So we might see a bit of a slowdown until then. Now, looking at this World Stock Index, showing a little bit more weakness, but had a very similar candle. Now, where the chart looks weaker is the crypto markets. This is a crypto basket, and you can see after breaking this out, we had a little false hope there that we might rebound. But you can see the prior resistance is now the support, or the prior support became the new resistance. So we are now seeing a market to kind of make another leg lower here. So this is the time to really bring down the bullishness in the crypto markets as we are seeing things turn over here. Now, looking at the daily performance, cryptos again, Bitcoin actually was the worst performer. Remember, Bitcoin has been one of the best performers. So we are seeing one of the best one turning around as well, and everything else sort of staying in the negative territory. So don't really like the cryptos here. Now let's talk about currencies. The Japanese yen continues to getting hammered here. So we are seeing another big leg down in the Japanese yen after a brutal sell-off on Friday. This is again after Bank of Japan staying ultra dovish. Now, on the other hand, dollar was able to have a small gain today. That again coming after a better than expected PMI figures. Now, Swiss franc, small day here. Again, not a whole lot happened in the European currencies. What we are seeing is a bit of a pullback in the euro and pound. Remember, pound was one of the best currencies last week along with the euro. So what we are seeing is a bit of a slowdown there. So where did the money go? So this is where we are continuing to see some rotation. Remember last week, Kiwi was the best currency. Today, Kiwi is actually not taking part in any of the moves. Australian dollar, on the other hand, was the worst currency last week, is actually catching a nice little bit here. So again, this is why it's very important to keep an eye on what's moving and trade that accordingly. And not always we get that continuation. We are seeing a lot of back and forth. The Canadian dollar surprise, again, after continuing its extend the gains that we had on Friday, we had a nice little uptick on CAD today as well. So we'll have to see how the CAD is going, or where the CAD is going to break out. If there's a breakout on that resistance level, we'll take a look at the technical setup pretty shortly here. Now, the equity markets still remains positive, +2. Again, I will be not looking for a bullish setup here because, again, I think we could pull back a little bit. But overall, the direction is still to the upside. Now, looking at the schedule, so we started off with a better than expected manufacturing PMI out of the U.S. Overnight, we have the RBA, and tomorrow morning we'll have some more data out of the U.S., the Joel's job opening. Remember, last month, we had a pretty nice drop in this number, and that caused a nice move in the dollar pairs. So something to keep an eye on. And tomorrow evening, we have the Kiwi employment report as well. So very busy week this week, and every day we have to really focus on where the volatility is likely to be. And in the next 24 hours, we're expecting some more movement in the Aussie and the Kiwi pairs. So outside of that, let's do a quick currency analysis and see where the velocity scores is and what we need to focus on. And right now, yen continues to be in the leading board onto the downside, -3. So which means that doesn't matter what you're pairing it up against the yen, it has a pretty big move. I mean, especially dollar yen have had a critical move today. We continue to see CAD yen, Aussie yen, again, very nice movements that we have to really look at in the upcoming few days ahead. I think this is the trade that is really working. Now, the things that were working, like the British pound and Swiss franc, or even the euro, could be taking a little bit of a break here. Same thing with the Kiwi. These four currencies were pretty strong last week, and they're just taking a little break here. So focus on what's really moving. So let's take a look at possible trades ahead and see if we can find anything for this upcoming trade session. So let's just start with the Japanese yen. You can see how bearish this price action is. If you want to use a textbook of how bearish this price action is, you can see that even on a 15-minute chart, no bounce, just basis. Any rally that's happening will be just sold off. So overall, this is the time to only look at one-way trades, which means that we want to be looking at yen to the downside, and if there's any rallies, we want to stay out and then maybe short that rally. So this is a one-way trade, not seeing a whole lot of movement or volatility. And if we take a look at daily chart, we still have some of the down move to get to the support level that was back in October. And if that's the case, there's a lot of currency pairs that actually looking pretty good on a technical basis. For example, dollar yen. It looks like it wants to break out. It's above the 20 to 50. We went from 134 up to 137. If it breaks above this key resistance, I think we can easily claim that 140 area. Remember, back in October, we were trading about 150. So there's still room for this to run. Along with other currency pairs like CAD yen, we can see that it has already broken that resistance. So any sort of pullback that we see in yen pairs, I think will be a good buying opportunity. Same thing goes with other currency pairs like Aussie yen. They're recovering here. So Aussie yen and Kiwi yen, they don't look the best technical basis, but again, that's really where most of the underperformance has been. But if you compare Swiss franc yen, we'll see that we're actually hitting new highs. Taking a look at euro yen, new highs. Same thing with the pound yen, new highs. So this is where I get the question, hey, the chart looks very extended. What should I do? Again, this is usually a tough thing to kind of do when you see this one-way trades because they just continue running and running. So this is where you go down to a reasonable time frame that you want to set up your chart on and just use those pullbacks or bases to get long. And right now, we're seeing a bit of a breather here. But I think all of these bases, that would be just a good buying opportunity. So, like I said, the yen, I only like it on the upside. Looks extended to me, but this is where we need to see some sort of base coming in ahead. Now, let's talk about other currencies like the Kiwi, which was really active last week, and you can see it's a start to give up the gains here. So one thing to keep in mind is that this is still in a downtrend. So what do you do in a downtrend? You sell these rallies. And right now, it's failing the rally right here, around those key levels here. So I still like Kiwi to the downside here. Shorter term, hasn't really given up the gains. But in the next 24 hours, if this gives up this level here, I like it a little bit on further to the downside. So what we want to pair with? That's a big question here. Let's talk about dollar here. So dollar had a nice little move today off the ISM number. And so far, we talked about how the dollar is slowly inching higher, but it's not really a super bullish trade. But I like the fact that we're seeing a little bit direction here. So just like we have the yen in the short side, I don't mind taking a look at any sort of the pairs onto the dollar crosses as well. Like, for example, Kiwi dollar. I'd really like this on a daily chart. You can see we rally up to the 20 to 52 moving average, and we're slowly pulling back. This is a nice little bearish candle here. I would expect for further downside risk over here as well. Now, we're taking a look at other pairs. Aussie dollar. Again, we had a nice rally, but then look at the tail that we have on this candle. So going to the RBA tonight, our primary focus will be on the Aussie crosses. Keep an eye on Aussie Kiwi. Again, we want to make sure that we are making trading the right currency pair. you can see that the last 2 weeks has been a lot of movement in between the Aussie Kiwi pairing. We one point the Aussie was the strongest, then Aussie was the weakest, and now we're starting off with Aussie being a strong currency. So again, this will really help to guide which currency pair you want to go with. Is it the Aussie dollar? Is it the Aussie or is it the Kiwi dollar? I think that both kind of looks good to the downside. We are experiencing some pullbacks in European currencies as well. I think we can continue to do so. And in this case, look at euro dollar. It's been really nicely held up above that 20-day moving average. But if it gives up this 109.50 area, I think we can break lower. Still expecting some consolidation. Maybe by Friday, Wednesday, when we get the FOMC, we'll be able to get a breakout one way or the other. Same thing with better performers like pound dollar. They're sort of having a bit of a pullback here. So I think at this point, I like dollar long and I like the yen short. So this is where dollar yen is really the best pairing here. So which time frame we want to set this up on? I mean, look at the bases here. We got a base, a breakout, a base, a breakout. So right now we are thinly in a very small little range that we're trading here. So if we can break above this 137.61 area, I'd like another push to the upside. So this is the number one trade that I'm looking at, especially if you like dollar to the upside. Outside of that, there's a lot of dollar pairs that don't look the best. Again, today, Canadian dollar had a nice little recovery here. So let's take a look at CAD as well. So you can see that we've been trading within this range, but it seems like we're kind of bouncing right from the middle here. So last 3 days have been nicely to the upside. 4-hour chart, it is showing nice little gains here. So at this point, I think we want to be looking at pullbacks to buy into the Canadian dollar. So in conclusion, we're looking for more movements as we get this news events day by day, looking at a bigger move in the equities after the FOMC. But meanwhile, we'll be just looking at trades around the news events. So overnight, RBA. And then tomorrow, we'll be looking at Joel's job openings, followed by the Kiwi employment report. Trade less, not more. It's count your trades. Again, there's already a lot of events to go through. So this is where keep the powder dry, be active when there's a movement, and then stay on the sideline when there's not a whole lot of movements. We have a pretty busy schedule. We have a pretty busy schedule this week. Again, meeting pretty much every single day. Tonight, we'll be meeting for RBA rate statement, and then followed by, we have Wednesday, the FOMC, Thursday, the ECB, and even on Friday, we have the non-farm payroll. So we'll be meeting tonight, so make sure you register for that class. Hopefully, we can catch a good trade off of it. And again, we'll be just rinsing and repeating the same process pretty much in every single trade event this week. Till then, take care. Happy trading.